Welcome to the deep dive. Today, we're looking at, well, more than just the markets. We're really charting this huge global power shift.
Driven by AI, right, artificial intelligence.
Exactly. It's maybe the most capital-intensive tech we've ever seen. We've pulled together sources on market chaos, the U.S. China trade tensions flaring up again.
And crucially, where all this money, this sometimes controversial capital, is actually coming from for the AI room.
Yeah, you see the headlines every day. S&P 500 is choppy, the VIX, that fear gauge, crept past 20.6. Lots of noise.
But if you cut through that daily noise, there's one really, really strong signal.
And that signal, according to former Fed Vice Chair Richard Clarida, it's like the foundation for the whole economy right now. He puts it very plainly. AI spending is a big driver in the economy. So our mission today is to unpack that. Where's the money coming from? What's it actually building?
Yeah.
And, how is this massive project changing geopolitics, changing jobs?
It's the scale. The sheer scale is just, well, it blows historical norms out of the water. We're not talking software tweaks here.
No.
This is heavy industry stuff. Data centers, power plants. It needs just truly staggering amounts of capital. Unprecedented, really.
And the AI companies themselves, they're already focusing on efficiency, not just raw power. Look at Anthropic.
Right. Valued at, what, $183 billion? Chasing OpenAI, which is pegged at maybe $500 billion.
And Anthropic's revenue, already nearing a $7 billion annual run rate. Their strategy tells you a lot about where things are heading.
What's really interesting is their latest model, Claude Haiku 4.5.
Smaller, cheaper, faster.
Exactly. It kind of signals the end of that one-size-fits-all giant AI brain idea.
And here's the kicker. This cheaper, smaller model, it's actually beating older, bigger ones like Claude Sonnet 4 in specific tasks.
Like coding, right. The sources mention the SW Bench Verify test.
Yeah, that's the industry standard for testing how well AI solves real coding problems, like the ones on GitHub. Haiku 4.5 actually comes out ahead there.
So that means, companies don't need the most expensive AI for every single job.
Right. Anthropic can pitch Haiku for high-volume stuff, like monitoring financial data fast. Speed and low cost are key.
And then maybe pass insights to a bigger model for deeper dives.
And this isn't just theoretical. It's hitting businesses now. Salesforce CEO Mark Benioff, he says, their AI, Agentforce, isn't some add-on.
No, it's core.
It's part and parcel, he says. The core platform for every product. This is becoming fundamental business infrastructure.
Right. It's past the novelty stage. It's basically the new operating system for a lot of companies.
Okay, but building this infrastructure, the data centers, the GPUs, the power takes so much money that traditional VC funding, it just can't keep up.
Which brings us to geopolitics. Where's the cash coming from?
Yeah.
A huge part of the answer is sovereign wealth. Specifically, Abu Dhabi's MGX. They're becoming a really critical capital source.
Following that Saudi PIF playbook, right? Diversify away from oil by betting big on future tech.
Precisely. And their checks aren't for millions. They're writing checks for billions.
So how are they actually putting this capital to work in, say, U.S. infrastructure?
They're backing some of the biggest deals we've seen. They were part of that consortium. NVIDIA, Microsoft, BlackRock, Elon Musk's xAI were in it too.
Right.
To buy aligned data centers for, get this, $40 billion.
$40 billion. Wow, that's cited as the largest global data center deal ever.
Colossal. And that's just one piece. MGX is also in the AI Infrastructure Partnership, the AIP consortium.
Okay.
That group plans to spend $100 billion, mostly on U.S. AI infrastructure. And critically, they're involved in Stargate.
The OpenAI Oracle SoftBank venture.
That's the one, a $500 billion joint venture. So if you trace the money physically building the future of tech, a huge slice leads back to these sovereign funds.
But these massive deals, especially with foreign sovereign wealth, they don't fly under the radar in Washington, do they?
Not at all. There's serious political scrutiny. MGX has some, let's say, controversial connections mentioned in our sources.
Like the reported $2 billion funding for Binance, the crypto exchange.
Yeah.
Using crypto, apparently bought from the Trump family's World Liberty Financial.
That, and also joining U.S. investors trying to buy 45% of TikTok USA, to help it dodge a potential ban.
And that combination, tech, foreign money politics, draws fire. Senator Elizabeth Warren called MGX a shady Abu Dhabi firm.
Yeah, and questioned if the TikTok deal was some kind of backdoor deal.
So does this political heat, this kind of public questioning, does it pose a real risk to these giant $500 billion projects?
Absolutely. Geopolitics is now a core part of due diligence. One VC in our sources warned about it.
What'd they say?
Basically, the risk of political blowback, maybe if the administration changes or if regulators dig deeper, that's a significant threat to MGX's long-term U.S. bets. They're buying our infrastructure, sure, but they're also buying our political risk.
Okay, so this huge wave of capital is changing regulations, even sparking ethical debates about content. But let's bring it back to the economy. How is it changing the basic unit? The job.
Right, from data centers to the knowledge worker.
Yeah.
And this is where the shift is maybe most visible right now. Look at Q3 bank earnings. JP Morgan Chase, profit up 12%. Goldman Sachs up 37%.
Huge profits. Blockbuster numbers.
Yet, they're hiring fewer people.
That seems like a major shift. JP Morgan's CFO said it outright, didn't they? A strong bias against having the reflexive response to hire more people.
Because they're using AI for what they call the mass production of knowledge work.
Mass production of knowledge work. That's a powerful phrase.
It's not theory. It's right there in the Q3 profit and loss statement. Does this mean future profit growth is sort of permanently uncoupled from hiring more white-collar workers?
Wells Fargo CEO Charlie Scharf, he put a number on it. He estimates AI gives coders a 20 to 40% productivity boost.
20 to 40%, that kind of efficiency gain. It drastically cuts the number of people you need for complex back office, middle office, even development roles.
That's huge.
Yeah.
Affecting highly paid jobs, too. Now, let's layer on top of that the global trade situation, because that uncertainty just compounds everything. The U.S. China feud seems to be heating up dramatically.
It really is escalating, almost a tit-for-tat economic conflict. China restricted rare earth mineral exports vital for advanced manufacturing.
And then President Trump fires back, threatening 100% tariffs on Chinese imports.
And even talking about a cooking oil embargo. Retaliation because China apparently didn't buy enough U.S. soybeans.
That uncertainty creates immediate winners and losers in the market, right? That cooking oil threat.
Instantly boosted domestic processors. Bunge global shares jumped over 11%. Archer Daniels Midland up 1.5%.
Why the big jump?
Because the U.S. imports a ton of China's used cooking oil, like 43% of their exports.
Right.
If you cut that supply, domestic processing suddenly looks way more valuable.
And policy is trying to respond directly to China's tactics. Treasury Secretary Scott Bessent said the U.S. will set price floors in some industries.
Right, to counter that historical Chinese strategy. Dump cheap materials like rare earths, drive competitors out, then dominate the market.
So the Fed is caught in the middle of all this trade and industrial policy mess. Their beige book even confirmed tariffs are pushing inflation up.
Businesses are stuck, absorb the costs, or pass them on.
And this trade uncertainty is actually influencing monetary policy calls.
It seems so. Fed Governor Stephen Miron is pushing for really rapid rate cuts, like 1.25 percentage points beyond the expected September cut.
Why so aggressive?
Specifically to soften the economic blow from all this trade uncertainty. Geopolitical risk is now setting the pace for the Fed, arguably.
Okay, let's zoom out a bit. How is this mix high costs, policy risk, trade wars hitting specific sectors? The EV market seems to be having a major moment of doubt.
A major retreat, yeah. Legacy automakers are hitting the brakes hard on their EV plans. GM's taking a $1.6 billion charge on EV investments.
Ouch.
And Ford expects demand to basically get cut in half compared to what they thought before.
What's driving that? Is it just cost?
A big catalyst is policy. That $7,500 federal tax credit. It's expiring in September. It was part of the Trump spending bill, actually.
Right. Losing that subsidy definitely cools demand.
And that's compounded by other moves, like revoking California's waiver for vehicle standards. It signals a policy shift away from pushing EVs so hard.
What about Tesla? They're still the biggest U.S. EV seller.
They are, but their market share is slipping. Everyone's watching their next earnings call for hints about demand, especially since they just rolled out cheaper versions of the Model 3 and Y, trying to offset that lost tax credit.
Okay, what about housing? How's that reflecting this climate?
Caution is the word. Single-family construction permits, down for 8 straight months.
8 months. That's a clear trend.
It speaks volumes about affordability issues. High rates, high land costs. Builders are wary.
Any bright spots?
Multifamily is holding up a bit better. Permits are slightly positive year over year, up about 1.4% year to date. Suggests rental demand is still pretty strong structurally.
Okay, let's bring it full circle back to AI infrastructure one last time. Because the power demand is so huge, it's actually reshaping energy strategy.
This is a critical link. AI's power needs are making people look seriously at nuclear again.
Seriously enough for the military to get involved.
Exactly. The U.S. Army just launched something called the Janus program. The goal is to deploy commercially owned and operated micronuclear reactors.
Microreactors. For military use.
Well, commercially owned and operated, but deployed potentially for military needs or critical infrastructure support. They're aiming for deployment by September 2028.
And that's a direct response to AI's power demands.
It's cited as a major factor, yes. Responding to a Trump executive order on energy modernization, too, it's basically the military trying to solve this massive power problem driven by all the data centers AI needs.
So we've followed the money from sovereign funds like MGX through the political storms and trade wars driving market swings.
And seen how it reshapes everything from jobs to EV policy to, well, nuclear power strategy.
If you put it all together, what's the big picture takeaway?
I think the main thing is that the enormous capital needed for the next wave of tech, AI, data centers, clean energy, it's now completely tangled up with government policy and geopolitical risk.
And that entanglement causes the volatility we see.
Right. But it also forces this incredibly fast, almost radical re-engineering of everything. How knowledge work gets done, how we secure energy. Even Walmart's push for domestic manufacturing fits this pattern.
So what does this all mean for you trying to make sense of this new economy?
Well, it feels like we're in a moment where the future of tech, whether it's the AI models themselves or the infrastructure they run on, it's becoming less about pure invention in a garage.
And
more about which countries, which political alliances can actually raise and manage the truly astronomical capital needed to build it all.
that concentration in power, it must change what innovation even means, right?
Exactly. It makes innovation feel much more like a state-backed project than just a private venture. So the question we'll leave you with is, how does that kind of centralized geopolitical control over capital change our definition of innovation itself?